Given the uncertainty of global economy and the concerns of low, even negative interest rate, may result in fluctuation for stock and the currency market. And investors are facing tougher situation than before. And today we're glad to have the Vice President at Janus Capital Group, Nick Thompson. He's also the Director of U.S. Equity Strategies. Hello, Nick.
Hello. Thank you for having me.
So, Nick, could you see or tell our investor any risk or opportunity in today's market?
So I think there's both in the opportunity in the market today. There's plenty of risk and certainly plenty of opportunity. Mm-hmm. In the post-Brexit world, we see three different scenarios unfolding. One scenario is a challenging environment where the Brexit concerns become much larger than they are today. We see more populism rising around the world. We see central banks unable to really reignite the economic environments. The good news is that we see a low probability of that scenario. Mm-hmm. We see another scenario where central bank policies are effective in reigniting economic growth, mm-hmm. where consumers around the world continue to spend, and the Brexit issues become sort of a non-event versus become a major issue. We also see a lower probability for that type of scenario. Mm-hmm. So our expectation is that we will continue to see an environment where slow, sluggish growth around the world promotes successful equity investing for growth investors. Mm-hmm. Most companies will continue to use the buying back of stock and M&A activity to generate growth. Mm-hmm. Consumers remain healthy around the world, and the markets have slow but steady performance.
Okay, and because many investors are concerned about the post-Brexit world may affect many European countries. They want to have a same result like a British. Mm-hmm. For example, in this year, Italy, they will have the vote. So in your opinion, this election schedule will affect the stock market or even the capital market?
So the question is mm-hmm. Brexit more like Lehman Brothers mm-hmm. or more like Cyprus?
Yeah.
And in the Lehman Brothers example, it created a global financial crisis. Mm-hmm. In the Cyprus example, it was really a lot of volatility, but really no real impact on the overall market. Mm-hmm. We think it's probably more like the Cyprus environment, where you have a lot of volatility around each one of these elections, mm-hmm. and a lot of volatility around whether or not populism is going to take over, mm-hmm. but that in reality, it's very, very difficult for a country that is part of the Euro to leave the European Union mm-hmm. than just a country that's part of the European Union. Because remember, the United Kingdom has their own currency, so it's much easier for them to vote their way out versus Italy or Spain, where they would actually have to create an entirely new currency system. Those countries are part of the Euro, which would make it difficult for them to vote their way out of the Euro.
Okay, and could you talk about Asia, like China, because many investors are concerned about the Chinese economy is getting, the growth is getting slowed down. Yeah.
Yes, certainly China was one of the most popular topics of 2015 and early 2016, mm-hmm. as we saw concerns about slowing infrastructure spending and then the devaluation of the yuan very much impact the US markets. Mm-hmm. We've always said that the Chinese consumer remains healthy, and that the Chinese consumer spending will eventually take over to be the engine of economic growth in China. Now, we certainly will continue to see infrastructure spending slow down, mm-hmm. but we believe that that is well known and well understood, so it shouldn't have the same volatility in the markets, and that people will start to recognize, investors will start to recognize that the Chinese consumer is continuing to spend, continuing to travel, and that's creating investment opportunities for investors who are looking for opportunities in China.
Okay, and what about the oil market? Because the oil price is at the lowest level of the past 10 years. Is it a bottom?
So we believe that what we have today and what we've had is too much supply mm-hmm. with good underlying demand.
Yeah.
And so if you look at the numbers in the US, you actually have seen the production come down You've seen the number of rigs that are producing oil come down. And so we're starting to see a little bit of a firming of the supply. Now, very recently, post-Brexit, oil prices pulled back again. That has a lot more to do with concern about demand, certainly in Europe. We don't have that concern about demand. We're very much more focused on supply, and we think that the supply picture is firming up, and that's creating a stable base for oil prices to rise slightly from here, but they will not get back to the levels that we saw in 2013 and 2014. We really don't think that they will.
Okay. Merger and acquisition has been playing an important role in supporting the equity market. Do you see the M&A activities keep going in the future, and why?
We do. We believe that in a kind of a slow but stable economic growth environment, that companies are going to have to generate revenues through M&A activity, and then they'll generate earnings through managing their businesses well, and potentially buying back stock. So M&A activity will continue to be an important way that companies are generating growth. And there certainly are a lot of opportunities, given kind of the volatility that we've had in the markets, for inexpensive acquisitions.
We see many successful cases like Google merged the YouTube, and Facebook merged Instagram. It's all a very successful case, right? And so in the future, you will expect more this kind of activity happen.
So yes, I think that you will see M&A activity across multiple sectors in the market. You've certainly seen quite a bit of M&A activity in the healthcare space.
Yes.
You've seen quite a bit of M&A activity in the technology space. We think that you can start to see some M&A activity in the industrial space, where the companies have struggled, and certainly we've had a slow industrial complex in the U.S. In the energy space, you could start to see some M&A activity. And even in the consumer space, we've actually seen some M&A activity. So I don't think there's any one sector of the market where you're most likely to see M&A activity, but I think you are certainly going to see sort of the bigger scale players and the bigger players acquiring a lot of the smaller players across most industries in order to generate growth.
Oh, okay. So in general, does Janus favor any sectors in its equity portfolio?
So we favor the sectors where there's a tremendous amount of innovation. And I think importantly, you can see that innovation in a lot of different industry groups across many sectors. One overarching sector where there's a tremendous amount of innovation and there has been a tremendous amount of uncertainty is in the healthcare space. So healthcare stocks have had a big overhang of uncertainty because of the political landscape in the US. But at the same time, these companies are creating tremendous innovation. They're developing drugs that are meeting very high unmet medical needs. And so we think there is a disconnect there between the innovation of these companies and the valuation that they have in the market today.
So you see the trend developing with these sectors is healthcare. And any other industry?
Well, so within each sector, looking at individual industry groups, there is a lot of opportunity for innovation. I mean, within the financial space, there are asset managers who are providing innovation in asset management, developing products that are very attractive to investors. I think in the industrial space, you have companies that are utilizing technology and big data to allow their entire platform to communicate. In the technology space, certainly you're seeing the emergence, the continued utilization of cloud-based technology, and then the big data options that are associated with cloud-based. So I don't think there isn't one sector of the market that has the most innovation, but certainly within each sector there are industry groups that are innovating and have the opportunity to take tremendous market share gains with innovation.
Oh, okay. Oh, thank you, Nick. So your favor is innovator, and these companies, they really earning and have the potential in the future. And so recently the equity rallied sharply with the financial bounce of bottom. so many investors, they are regrets the hold nothing in hand. And is it really good time for them to invest now or just wait a bit?
In the financial sector or just in the investment landscape overall?
Overall.
Yeah. So I think it's always a good time to invest in the U.S. equity markets because if you're picking the right individual companies, there's a tremendous amount of growth potential. I also think that for investors outside the U.S., if you're investing in the U.S. market, most of those companies, certainly anything that's a smaller cap company, has more exposure to just U.S. growth, so less exposure outside the U.S., and they also will have very little exposure to currency fluctuations. So I think now is a good time to invest in the U.S. market, but I think there is some caution warranted in that you have to focus on innovation. You want to focus on where there's growth in the U.S. because that's the best economic house on the block today. And then you also want to avoid some of these overvalued areas of the market because that's where there's more risk.
Okay. Well, thank you, Nick. Your advice is really helpful to help the investor to choose a potential industrial and get perfect return in the future. And thank you again, Nick, for joining us today.
Thank you very much. Thank you for your time today.